Hi guys, I hope all of you are doing well. This is your Nifty guy, and welcome to today's episode on the value learning part or related to the stock market. And today's video is what I believe will be one of the most important videos to be ever featured on this channel, right? Because the topic of today's discussion is around investing into the Indian equity market and overall investing as such. So I will be giving my 2 cents on it, and I will be dividing the video in a couple of parts. The first part will be for people who are new to investing into the stock market and they would want to know how exactly to start with and where to start with. Uh, the second part of the video will be for a bit of seasoned investors who are already investing, but I will give my take on how I look at investing and how I try to keep up with the changing market scenarios, also not just in my trading, but also in my investing style. And the third part is something which I'll cover at the end, will be some common mistakes that we can avoid while our in the investment journey that we have, right? So see, I'll start with my personal experience. So my uh, introduction to the Indian stock market was with investing into the stock market, not trading. Trading came in a little bit later when I got too keen and interested in how the entire thing functions and how we can also make good fortunes in trading into the stock market. But investing is something which is very, very close to my heart. So I started my journey with a detailed brief on the portfolio of my dad once I started earning and everything. And he is a person who has the idea of only sitting, buying, and then forgetting the stocks that he has, right? So he will only be selling it when there is a need of a financial requirement. Otherwise, he has held stocks for decades, got the bonuses, got the splits, got the dividends and everything. And obviously, the portfolio value has increased over the time, increasing, uh, creating a good amount of wealth in the long run. So when it comes to investing into the Indian stock market, everyone wants to grow their money, right? But the moment we hear stock market, most of us are confused or even scared, right? So some people even call it gambling, Tatta Bazaar, whatnot. But if that is you, don't worry. In this video, I will walk you through how to start investing in the Indian equity market in a way that's simple, practical, and safe at the same time, right? So first, trading versus investing. So trading is a short-term, high-risk uh, program, but it also needs a good amount of expertise. Investing is a long-term thing. You need to do a bit of research on it, and ideal for wealth creation. Right. In case if you are just starting out with the stock market, my suggestion would be to focus on investing and not trading. Start with buying out stocks in the cash market and then proceeding ahead. So the first part of the video, which I said is for the starters, people who are new to the stock market, right? So people who are new to the market and have got no idea about how to read charts, work on it simultaneously, build your knowledge, build your expertise in that. But in the thing, what I would want to start with is start simple, right? You can invest directly into blue chip stocks. These are low risk stocks. That is why this is for the people who are new to the stock market, right? You can invest directly into blue chip stock. Some examples of them are like TCS, HDFC Bank, Infosys, etc. Right? You can invest in these blue chip stocks directly by purchasing them in the cash market in your Demat account, right? Sorry. Uh, Apart from that, in case if you are not, if you're extremely new to the market and you are not able to filter out the stocks on by yourself as to which stocks to invest in, my suggestion would be to go ahead with mutual funds or index funds like Nifty 50. And in case if you are extremely new to the stock market but would want to start your investment journey, the right way and the most easiest way to go ahead is with mutual funds, right? Be it funds based on, and the best ones to start with would be the index based. funds to start with, right? So that is something where you can start in a very, very simple way. Uh, and based on your monthly net inflow, which is there, you can uh, either fine tune a fixed amount that you are putting down into the buying of stocks directly. And otherwise, you can start an SIP in any of the index funds, right? Do not try to go ahead with the high risk funds, which are the small cap or the uh, balanced mixed advantage funds and everything. So there is a separate, I think, index or the mutual funds entirely would require a separate video. I'll try to make a video soon, pretty soon on that as well. But if you are new to the stock market, please stick to these simple things. Do not even look at trading right now. And the topic obviously today is investing, so I will be focusing on investment per se. So if you are new to the stock market, please stick directly to buying stocks or into the stock funds. If you are someone who is seasoned into the stock market now, this is a place where I have found my own space and I prefer to differ from my dad. My dad has a very great portfolio. He has turned around the life for most of us around the family members just because he had a good exposure to investing from early in his careers and he got invested into very good companies, very good blue chip companies, and he has holdings in Colgate, Palmolive, HUL, Britannia, ITC, TCS, Infosys, Wipro, you name the all the big companies, and he has a good amount of uh, holding in all of them. And but that is something which I believe will work out for everyone if you are just simply buying and not looking at selling it. In the long run, you will be building some wealth. But what if we can actually look at uh, adjusting to the changing scenarios? So, right, in stock market also there is a concept known as sector rotation, right? Wherein due to the certain changes in the scenario, like for example, the macroeconomic scenario right now is the world is the news per se is the world is heading for a World War III with each country uh, forming groups, and then again there are wars breaking out almost everywhere. And so with this scenario, the defense companies will be in focus, right? So people would want to pump in money into the defense stocks because these are the companies which are most likely to make money during these periods. Similarly, when COVID had struck, so FMCG sector was the one which was just considered a safe haven because people would still be not buying consumer discretionary items like items of luxury and everything, but they will still be needing the essentials, right? So FMCG companies were the flavor of the season when when COVID had struck. So based on the changing scenarios and everything, these factors will be at play, macroeconomic factors, and that is something which sector rotation will play its part. And in case if we keep a track of that, see, everything will require good amount of effort from your end. I am just giving a sneak peek into what I do and how I look at in my investing or how I look at managing my own portfolio. But the second thing is nothing in this world comes free. You will need to do your own homework. You will need to do or go that extra step so that you are on the right path and you can make the most out of it, right? So the second part again will which we'll start with will be the people who are uh, already invested or advanced investors, right? So here we will be covering. We need to keep an eye on monitoring our portfolios once every month, right? So that is the bare minimum. If you can do it, if you have the time and you can do it once every fortnight, it will be great for you. But once every month is something that everybody who is into advanced phases of investing, having a good portfolio, good size portfolio, means I would suggest upwards of 50, 60 lakh rupees minimum, running into few crores. You need to monitor your portfolios at least, I'll just write the word at least here as well, at least once every month, right? Uh, and like they say, do not put all your eggs in one basket. You are gonna be diversifying into various sectors in the Indian equity market. Right now, when I talk about the overall investing, obviously it is, I believe, quite clearly understood for the advanced investors that equity should only be a part of your entire investment or your entire funds. You have to diversify into debt instruments. You have to diversify into gold or silver, and you can also diversify into real estate. But right now, what I'm talking about diversification is in the form of, I'm sorry, I don't know what I'm type. So diversification is into various sectors of Indian stock market. So you need to find out. So I'll just quickly open up the website of Money Control. This is moneycontrol.com, wherein you can go and look at the sectoral indexes, right? So these are the various sectors that India has, and every basically all the countries this sector: Nifty Auto, Nifty IT, PSU Bank, FinService, Pharma, FMCG, Metal, Realty, Media, Energy, private banks, infra, commodities, consumption, PSEs, services, FinServ, consumer durables, healthcare, oil and gas, India manufacturing, India defense. So, like I was talking about India defense. So, if you click on that thing, India defense, it will show you all the companies that are a part of this particular sectoral index, right? Now, this is I have a reference point for where you can look at what are the various indexes in which you can invest in. Now, you say, for example, you have a corpus of around 50 lakhs. You need to divide that into at least 5 to 6 different indexes. Say, for example, you put out some amount of money in FMCG, then into metals, then into IT, auto. So that is the way you are diversifying your particular portfolio. And even in case of market movements or market fluctuations or sectoral rotations which are there, you are safe. Diversification will obviously save you. And the third most point is as I already said, you need to monitor your portfolios and you need to diversify. Uh, Now, the third part, which I feel is the most important, is create a watch list. I will show you a sneak peek into my watch list, which I have created. So, this I have created is the Indian indices. These are the indices which I used to actively trade. Right now, I am only focused on Nifty. I used to earlier trade Bank Nifty, Fin Nifty as well. This is India VIX. And then here down below, I have all the different indices with their charts plotted, right? So this is the place where you need to first of all do your study and homework. When I say we are investing for a long period of or a long term for wealth generation, but where to put your money is the next question that will come to your mind. And I believe this sector study is something that you need to do on your own. Say, for example, you see Nifty IT index looks like a head and shoulder breakout and then again a retest. So Nifty IT looks good. Now, this is the Nifty 500 index. This is Nifty Auto, Nifty Energy, Nifty FMCG index, uh, FinServ, Media, Metal, Pharma, PSU banks, the LT index. So these are some indexes which I have put out in my watch list. So right now I'm talking about the watch list. Then these are some global indices and other things that I keep a track of for the macro understanding of the thing. And now here what I have done is I have created different the indexes which are there, the sectors which are there, Bank Nifty. I have selected some stocks from each of the index. Now you can, to get a list of all the stocks, say for example, Nifty Auto, Money Control site is where you can easily and quickly get a list of what are the stocks which are inside of each of the indexes which are there, right? So here we have the Nifty Bank. I have certain components which are there, Nifty IT, Nifty Auto, Nifty Metal, Nifty FMCG. Now, these are the indexes in which I am invested in, not necessarily in all the stocks which are there, but in some of them. Nifty Pharma. So the first, I just wanted to share this with you guys. The first stock ever that I had bought after creating my Demat account was Sun Pharma, and it still is there. I bought it at around 400 odd levels, and right now it is around 1665. Obviously, with time, I have pyramided and added to the position, but that is something in which I am sticking to my dad's philosophy of buying and forgetting and not selling, because that was the first ever introduction of me and meeting with the Indian stock market, and that is something which I want to keep close to my heart, and that is reason Sun Pharma is a stock which I am never gonna sell. I am never gonna short. Right. Nothing against the trading community or people who do, but this is something which is a sentimental value for me, and that's the simple reason. Then again, Nifty Energy, Nifty Infra, Nifty FinService. This is something which I used to track, but not anymore, which is the crypto segment. Although I have some amount of money which I have invested, but this is not something which I am actively tracking or trading as of now. So I believe this is something which most people would already be aware of, right? People who are here who already have a big portfolio in the stock market. I am sure you are aware of the sectoral wins and how to keep a track of. So this is similar to how you keep a track of different stocks, whether it is in uptrend, downtrend, what is the market structure. Everything is the same in terms of with the uh, sectoral indexes as well, and you can do your same analysis in them. The same patterns would work on them. You can draw your trend lines and everything. Now, this is the basic thing which I believe everybody would be doing. In case not, please, please, please start doing it. And do it at least once a month. Try to see which sectors are leading, which sectors are lagging, and based on that, you can fine tune your portfolio. You need to look at the various components. So, say for example, we see that Nifty IT is on the verge of a breakout right now. We go to the Nifty IT sector, we find out these stocks. Now, it is a good amount of homework that you need to do, a good amount of hard work that you need to do. You need to study the charts of all of them, right? You need to so it's an ad which is coming up on uh, money control. So you need to look at the charts of all of them. And like there is a saying in the stock market, and it holds truer for investment is buy the strength, sell the weakness. You need to find out which stocks are showing strength, and that is where you want to put your money in. And in case if there is a stock in your portfolio which is showing signs of weakness, it is suggested and advised from me to book your positions in that and park your money elsewhere where there is a greater potential. Now, speaking about potential is now where I will come to the second part of my video, which I believe will be important for people who are uh, having advanced uh, knowledge of the or are heavy investors into the Indian stock market. So, for them, what I have a concept which is the relative strength. I spoke about it earlier as well. Right? Relative strength is something which in wherein the sectoral analysis that we have just discussed, you can even take it one notch higher up by comparing the strength of that particular sector to the benchmark index of our country, which is the Nifty 50. Now, that is something which I do. I am comparing all the indices to the Nifty 50, but the comparison can be done with everything. You can even do a stock level analysis. I will come to that very, very shortly. So this is the relative strength watch list that I have. So if we look at this particular chart, so this is basically nothing but uh, Bank Nifty by Nifty. You can look here. This is Bank Nifty divided by Nifty on a daily. This is the same on weekly, on monthly, right? Uh, I look at them usually on a weekly or on a daily basis for on a matlab daily time frame once for my analysis. So for now, we'll stick to the daily for the part where I'm explaining what exactly is this. Now, a relative strength chart is nothing but a ratio, right? This is a spread, which is the value of Bank Nifty divided by Nifty, and it will basically, in a nutshell, in a gist, if I have to give you, it will give you idea how is Bank Nifty performing in comparison to Nifty. So This is simple. The formula of division, Bank Nifty by Nifty. So in case if this is going up, say for around here, Bank Nifty was outperforming Nifty, right? Right now, Nifty is outperforming Bank Nifty because this particular ratio is going down. Similarly, if we look at the auto index, this is this Nifty Auto by Nifty, Nifty IT by Nifty. This is the Nifty Finance by Nifty, Nifty Energy by Nifty. Nifty Energy has given a double top breakdown. So this is what I am talking about. So you are seeing some signs of weakness in this. And but see, for this can be good for people who are trading stocks as well. But if we are looking at an investment perspective, I will say stick to the weekly time frame on the spread or the ratio charts that we have here, the relative strength charts that we have. Then this is a chart of Nifty Pharma by Nifty, then Nifty Infra. See, say what is the difference between Nifty Pharma or Nifty Infra right now? Nifty Infra is holding up its ground around these level, consolidating, whereas the ratio and Nifty Pharma is kind of given us a bearish candle around here. So in case if we have to park our money, I will choose Nifty Infra right now. In case if I am looking at fresh investments, I will look at Nifty Infra right now instead of the pharma sector. Nifty FMCG is looking weak in case I have my charts. Obviously, I will need to then individually go down to each of the holdings and then individually track them, look at them. Uh, and then take the final decision. Nifty PSU banks, Nifty Realty. So this is the sign of Nifty Realty. And again, when you can also look at base formations and base breakouts. So Nifty Small Cap Index had formed a very good, beautiful base around here. And once Nifty Small Cap broke out of this, anybody who would have invested around 19th of May around here, in a month's time, they would have gotten good returns, right? Same is the case with Mid Cap Nifty Metal. So these are certain indices that I keep a track of. Now it is very, how do you plot this on your chart? It is extremely simple. Uh, Click on the plus button. Say, for example, I have all the major indices already there. So I'll give you an example of a stock. Say, for example, HDFC Bank. You type HDFC Bank, click on it, divided by Nifty. You click on it, press enter, and here you will get that particular chart of HDFC Bank by Nifty. And you can have a look at the relative performance of HDFC Bank. How is it performing with respects to the Bank Nifty? Nifty. We can also do the same for Bank Nifty, right? So again, HDFC Bank divided by Bank Nifty index, and there's some error. I'll check on this. Why is this particular error which is coming in? But I hope you have uh, got the idea about how to go about in creating these relative strength charts which are there. And I use them only for sectoral indice readings and finding out. So, like I said, buy the strongest, sell the weakest. So that is exactly what I am doing here. Is we need to find out and fine tune our portfolios based on them. And from time to time, we can book our profits. There is no harm in booking your profits and keep on holding your uh, things. And once you reinvest your profits into buying of a sector which is emerging, right? So that is something which you need to keep an eye on, which is emerging currently, and in which if you park your money, you have higher chances of making money. That is how compounding will eventually work for you. So keeping and holding is one strategy, buying and holding of stocks is one strategy, but uh, I believe a better strategy is of trying to refine and keep a track of your portfolio from time to time, right? So I hope the concept is clear. It might be a bit strange to look at these particular ratios, but if you understand the price action, if you understand the candlestick charts and patterns and trend lines and supports and resistance and everything, I am sure you will be able to make some understanding out of it. And obviously, you need to spend some time around these and rack your head around them so that you are in so that you are able to grasp them and you are able to uh, control everything, and take your informed decisions, right? Now we will come down to the last part of the video, which I believe is the common mistakes which people make. Number one, and the most costly mistake that people uh, do is investing based on random tips. This, to my understanding, is a sin. Please do not invest or put your hard-earned money based on any random tips or even from influencers, finance-based influencers, celebrities. I am not sure if you heard about SEBI banning certain celebrities, including Arshad Warsi and the likes, for uh, uh, again sharing these random tips uh, on social media, and that is how people, their followers, would park their money. And those are simply pump and dump schemes where most people or most retailers have actually lost their money. So please take the hard route out there, do your research, spend your time on the market, and then put your hard-earned money into the stocks that you believe in, right? Or the simplest and best way is obviously to go ahead with the mutual funds. Um but even if some random day I come and tell you guys on my channel, go ahead and put your money in this particular stock. This is looking good, or this is gonna be going to this particular level. Please do not buy that. Right. So this is, I believe, one of the most important uh, lessons and learning which everybody should focus and follow on, is that is stop buying on random tips. Okay. Second, which I feel is a problem with the retailers, is panic selling, right, during market dips. Once we see, okay, market has opened with a big red candle, market is falling down, and people sell like there is no tomorrow, right? So if you are an investor into the Indian stock market, you have done your prior research into the company based on the fundamentals, the technicals, and everything, and you have done the sectoral index study and everything. You need to sit on your investment, right? You don't need to panic, right? Because panic selling during market dips is something which I don't think that wealth is built with panic, right? Wealth is built with patience. So panic selling is something which I believe should be avoided at all costs. In fact, what I will tell you something, on days where Nifty is down by almost 4%, those are the rare days. But when people are, those are the days where most of the retailers are actually selling. I will be looking at my portfolio and looking at strips which I am getting at discount, in which I can add on to my positions and pyramid, right? And once that panics goes away from the market, say for example, we have seen a lot of those phases. I don't even want to get into that. Uh, be it the COVID panic, people who would have sold around these levels, and think of the people who would have bought around these levels, right? What kind of wealth they have generated, right? The same is the case with multiple other scenarios where people would sell on red candle, right? That is something which I feel should be avoided at all costs if you are a long-term investment investor and you are looking at generating wealth, right? So that is something which is again a sincere suggestion from my side. Seeing Nifty sliding down, all red candles, do not get into the panic mode and start dumping your stocks, right? Be patient. Money is made there. Okay. Now, the third and the most important mistake is not diversifying. I have already spoken about diversification and its benefits, but when it comes to your portfolio, I have already given an example of how to diversify. Fine tune the sector, find out the sectors that you are interested in, and then you pick up stocks, multiple of those stocks based on those sectors. Divide your entire capital that you have into smaller parts and then allot them to each of the sectors. And then once you have allotted, say, for example, 10 lakh rupees that you are going to be investing in Nifty IT, divide that into five stocks, four stocks, and then put those things into individual stocks, right? And that is how you can diversify and uh, not put all your money in a single stock or in just a couple of stocks, because diversification is something which will help you in market volatility. Right. So I believe these are the three basic and common mistakes, and if you are proactively looking out and addressing these, you will be in a much better place when it comes to your investment journey. Uh, Said that, I will like to end the video around here. I would like to conclude by saying that the Indian stock market has helped millions build wealth, right? And it can also do the same for you. All you need to do is the right start. And post the right start, you need to keep that ball rolling by looking at the different things that I have just covered in this particular video is about looking at the different sectors, diversification, and keeping a active track of your portfolio. What people usually do is once they buy, they forget the portfolios. They simply do not look at them. They don't analyze the charts of their holdings from time to time, and that is the reason at one point of time they might be seeing a very good amount of profit in a particular script, but with time the profit evaporates, right? Why do we have to let that go? If we are proactive, we can spend some time just, and I have a portfolio which I manage has around 30 plus stocks. I also keep a track of my wife's account, wife's investments. That has another 30 odd stocks. There are some stocks which are common to both the portfolios, but overall, if I still see there will be around 40, 50 odd stocks that I keep a track of. And I do the analysis of them every fortnight, every 15 days. Every alternate weekend is something which I do on Sundays mostly. I take my cup of strong coffee and I sit and I analyze those charts and I make a note of them. What exactly are am I supposed to do? I also make a note on stocks which are looking very, very strong, right? So I put them in the notes on my phone as BOD, which is buy on dips. So the days which I spoke about, the panic days where people are selling, those that is the day when I see such a day, I will open that BOD chart, right? BOD notes on my phone and I will start putting in money in those particular scripts. Now, like I always tell you guys, to have a plan and then trade your plan. I believe the same goes for investing. Have a plan and then again invest in that plan. Similar thing, right? Same story, similar thing. The same thing that you are doing, you are already planned. So, right on the day when people are actually selling their stocks selling their holdings in panic, you are already prepared. You have already done your homework, and you know which are the stocks that you can get at a good discount when people are panic selling and those stocks are falling down because you have already done your homework. You know those stocks have a good amount of strength in them, and that is the reason why you can easily make good money in them in the long run, right? So, yeah, hard work will pay you off in the long run in the stock market, and that is something which only you need to do for yourself. Obviously, I or many other people who are working hard on YouTube to put out such informative videos can only help you. Uh, so I hope, guys, I have been able to bring a fresh new perspective to the age-old trading which is there. And in case if you guys like the video, please, please, please do not forget to like the video, subscribe to the channel, and also put down anything that you might have to say in the comments box. I am open to everything. So this is it from my side for this particular topic for today. I will keep on making such informative videos for all of you, which I believe will be helping you. So do not forget to like, share, and subscribe and comment, of course. So this is your Nifty guy signing off for today. I hope this video was a good start for people and also a good start for people who are new to investing and also a good value addition to people who are already invested in the stock market and they can refine their investment journey with me. So that being said, this I'll take your leave today. Thank you so much guys for watching. Have a good day. Thank you. Cheers.